I don't know about you folks, but I've been waiting to talk to Jonathan Twomley because he and I have been warning for a greater part of a year that there are some new syndicators out there that are going to simply crush their limited partners. And we have our first of what will likely be many examples. That 3,200 unit apartment building, C-class apartment building in Houston, Texas, where LPs lost $100 million by my estimations, and the bank lost about 14%. So an asset that traded at 270 million retraded at about 176. So it is starting. And more importantly, this happened in a year. The deal closed in a year. The money was bad the day it closed. Jonathan, you've warned us this was coming. You focused even on C-class apartments. When cap rates came down, everybody believed you could go to the moon. Simple value add. Everybody wins. The pain is here, or at least it's starting. What do you think?
Yeah, I mean, this is, I feel really bad for these operators and for anybody who invested with them. But this is an example of what happens when you start to drink the Kool-Aid, right? I mean, this is an example, I think, of where people did a deal, they had stars in their eyes, they were like, I'm astonished at how much capital they were able to raise. It's a huge deal, right? I mean, the size of this deal is just kind of astonishing to be able to put that together as a syndication. But they clearly thought that interest rates were going to stay low forever. They were going to be able to just do this, I mean, quite massive value add on this many units, turn it around and sell for a big profit. And lo and behold, interest rates went up. I'm not sure if they had a rate cap or not, but even if they
appear to.
Yeah, even if they did, they would still probably get crushed anyway because their debt service would have leaped up by a lot, even with a rate cap. The rate cap on a deal this size must have been extraordinarily expensive. I mean, you're talking millions and millions of dollars just to buy the rate cap, which is, if they didn't have one, that's probably why they didn't. And they just believed that, interest rates would never go up. And here you are. And they couldn't make their debt service, and they handed the keys back to the bank. So
yeah, I will admit that I'm a little shocked that this went so bad so fast. Again, if I saw this deal a year ago, I could have told you it went in badly. But I'll admit it, under a year to go bad, that's pretty quick.
Well, it's because interest rates went up so quickly, right? And so they just obviously weren't prepared for that to happen. They probably, I'm guessing, I mean, I haven't really dug into the details of this story very deep because I was away in Japan last week and not really focused on this, but obviously it was in the news and you couldn't miss it. But I'm sure that their underwriting was also aggressive on top of it, right?
Of course.
So it had to have been, because just listen, to get deals done at the top of the market, that's what people were doing. They were underwriting very aggressive rent growth. They were underwriting, low interest rates forever, exiting at low cap rates, all this kind of stuff. And, basically priced these deals beyond perfection.
Yeah, beyond
right.
perfection, yeah.
And it didn't work in their favor. Plus, there was another thing going on, which I don't know if this affected them or not, but it may have, which is that at the beginning of the year, there was this blip where leasing activity really stopped, and there was occupancy actually went down slightly at the beginning of the year, because I think what happened was everybody was freaked out by all the news, about inflation, and they all just everyone just sort of hit pause on a lot of things, and that included leasing new apartments. So in the normally strong leasing season at the beginning of the year, a lot of apartments weren't leasing up, and people were leaving as normal because the normal things that happen in life, new job, new marriage, divorce, death, whatever, the natural, fluctuations in occupancy happen, but there weren't people coming in behind to lease up. Right. So, so that also could have hit them at the same time. It certainly has hit some operators where they've gotten rent softening at the same time that they've gotten interest rates going up. Right. And if it didn't have fixed rate debt,
I think there was just so many things wrong about this deal, because I've dug into a little bit. First and foremost, there's things that I've warned you about or we've discussed. Bigger is not always better.
Yeah.
I promise you, there are social media posts from a year ago where people were popping off and celebrating, we own 3,200
Yeah.
units. Like, that's some kind of badge of honor.
Yeah.
Second, managing C class. And I've heard from people that live in Houston, a couple of these buildings are D class, like war
Yeah.
zones, murders,
Yeah. Yeah.
ugly stuff. Aggressive assumptions. It was all bad. I mean, the deal was bad the day it was closed. They
Yeah.
overpaid and LPs lost. And that's what's coming. That's one of the things about this correction, or whatever you want to call it, crash in commercial, is LPs are going to lose everything. The bank, the financial institution, they took a 14% haircut where LPs lost everything. And that's just the different financing, because the LPs
Well,
are the equity.
but listen, LPs lost more than everything. LPs are actually in the hole because this was one of those deals where there was a big tax play to this as well, where
Of
they,
course.
because that's another thing that people were doing to raise
Oh,
money.
cost segregation. They did
Cost
that.
segregation. Yeah.
Oh,
So this is,
no.
so they did bonus to cost segregation and bonus depreciation to provide their LPs with a big tax benefit. And guess what? Now that the
All gets
property is
reversed.
foreclosed,
Yep.
it was deemed as a sale.
Absolutely.
They now owe the tax on the recapture of the bonus
Oh,
depreciation.
that's going to hurt.
So they've lost their equity. They have no funds coming in from a sale to pay the taxes with, and now they have a big tax bill on top of it, right? So,
Oh, that's a slap in the
so
face, but
those
absolutely. Yeah.
folks, but again, like I said, I feel bad for the people who were in this deal, but this is kind of like what happens when people get greedy, right?
Yeah.
And this is what happens when greed becomes the motivating factor in doing deals, and they do these, it was aggressive debt, probably aggressive underwriting, aggressive tax treatment, aggressive everything, right? And all premised on the idea that the current situation would continue, well, at least long enough for them to get out of this deal. Now, like, again, the size of this deal, right? If they were doing value add, I mean, look, pulling off value add on 150 units in a year and a half is hard enough.
Right.
How are you going to do 3,200 units, right? I mean, it's just nuts, right? And then you get into all these questions about whether it really could have even been done in this deal, given where these properties were located, right? There is a very, very good chance that the market would not have supported any kind of value add where these properties were, because these were not well located properties. So people just drank the Kool-Aid. Any deal is a good deal. You can always do value add on everything, aggressive everything, because it's all going to get paid back.
Yeah.
I mean, and this is like,
I'm
just
this
really sorry
this
about
deal
this
is an example of why I'm excited for your event next week. Again, where there are no tickets for sale, but I just wanted to say this is why I'm spending thousands of dollars. Olivia and I are going, because I run away from stupidity, right? The last couple of years I've been warning there's been stupid activity going on, but I want to get prepared for when there's blood in the street. And this is just a sample of what I see coming. It will happen in almost all markets. Not only will it happen at the big stuff, which I will get a bite at, but it'll happen in the 5 to 40 units, which Olivia and I plan to play in again, because there was a lot of stupidity or greed or whatever you want to call it going on.
Yeah.
And
at all levels,
yeah,
at all
at
levels,
all levels.
Yeah, it's not just the people who were doing these giant deals who were getting greedy. I mean, people were getting greedy at sort of whatever level they were at.
Yeah.
They were all reading the same stuff. They're all listening to the same podcasts. They're all part of the same feeding frenzy, right? And so I think you're going to see opportunity, resulting from this.
We have to. Stupidity will be punished.
Yeah.
Yeah. So at the end of the day, what I see coming is I don't really see any meaningful opportunities. I'd love to be wrong till Q4, Q1, because a lot of this is a slow roll.
Yeah.
But there is no question. This is the first of many like this coming. And there will be some large deals that blow up like this, but there'll also be individual deals. And that's why I'm coming to the event. That's why I signed up as soon as I heard about it. And yeah, folks, if you are one rental at a time and you're going, I believe there's at least 10 of you. I'll be getting your emails later today or tomorrow, and we'll send out a note to get together and say hi to everyone. Jonathan, any closing thoughts on this?
Well, I do have one thought that I have on this is, during the great financial crisis, apartments, I mean, there were syndications, right? This is not a new thing.
Right.
But it was not as widespread as it is now, right? So there were not as many people exposed to apartment buildings as there are now. And I think, so there are a lot more people right now who have, bought into syndications as a way of diversifying their investment portfolio. And that means that the pain that's going to be suffered is going to be a lot more widespread than it was before in terms
I
of
agree.
in
This will
terms
be
of
worse.
individual investors getting hurt, right? Because individual investors almost nobody was in this before. I mean, it was a really niche thing, right? You
Yeah,
had to
it was.
know a syndicator personally to even know about these deals. And there were people, all over the country doing these deals, but very quiet. There was no podcasting. There was no bigger pockets. There was not this whole sort of industry that's built up over the last 10 years or 12 years as there is now. So people did get hurt last time around, but it just wasn't, I didn't know anybody who got hurt. You didn't know anybody who got hurt. Nobody knew about this. Now there's going to be a lot of people who get hurt in this, and it's going to actually make it really tough to raise money going forward.
Absolutely.
Because so many people are going to have been like really, traumatized by their experience, and they're never going to invest in a syndication again. And they're going to tell all their friends never to invest in a syndication because of like their bad experience. And, nobody will own up to having been greedy and overextended themselves.
They'll blame it.
They'll blame it on everyone else. Yeah, they'll blame Powell. They'll blame the syndicators. They'll blame everybody. But the industry is going to change as a result of this for sure. So we'll see.
We will make that topic number 2, because I think that would be something you and I should riff on. But Jonathan, where can people find you?
Yeah, so lots of places. And one thing I realized is that I just realized this the other day, Michael. I have never once mentioned my own podcast on this show.
Well,
all this time, I have never mentioned my own podcast. I don't know why that escaped me, but if you want to hear me interview some really talented and interesting investors in the multifamily space, please go on iTunes and look for the Apartment Investors Club podcast. And we've got probably about 35 episodes up at this point. We will be putting up a YouTube channel as well pretty soon. So just look out for that. And if you want to join me in conversation directly, come to Facebook and join the Apartment Investors Club Facebook group. And then,
awesome.
You can find me there. So
thank you, buddy.